Silicon Valley Bank has collapsed. Should you be worried? What's up, guys? Dan here. In this video, I'm going to be talking about Silicon Valley Bank, the what happened and the fallout now after that it has been taken over by the feds, and what the government is doing to remedy the situation and how it's going to affect you as a real estate investor and my prediction of the markets going forward. Guys, stick around to the end for a giveaway that I'm going to be doing at the end of this video.
Nice.
All right, guys, so what's happened? If you haven't heard, Silicon Valley Bank has failed. They are a big bank primarily servicing tech companies in the Los Angeles Silicon Valley market. Over 90% of their customers were businesses that had large accounts with the bank that were doing everything from running payroll to operations and everything else. And they have essentially defaulted. So guys, why did they run out of money, and what is the government doing to remedy the situation? Now, they haven't said they're bailing out the bank, but essentially they are bailing out the bank, and I will tell you how. So what happened with Silicon Valley Bank is essentially a couple years ago, they invested a ton of money, $100 billion into bonds, which a lot of banks do. Now, unfortunately, they bought these bonds at very, very low yields. I think it was like just over 1% yield on their money, which is extremely low. And they did that to secure their money. A lot of banks do this. They buy bonds because it's a very safe, basically guaranteed return on your money. At least that's how most people. And so that's what the bank did. Unfortunately, they put a very large amount of their assets in the bank or in these bonds, and then rates rose. So they thought that rates would probably stay the same or would maybe go down, and rates ended up rising. So what happens then is that these bonds that they have are worth less and less, because why would somebody buy a bond that can yield, say, 2% when right now, bonds are going for between 3 and 4%, right? Nobody's going to buy Silicon Valley Bank's bonds. And so what happens then is, a bank does not just have piles of cash sitting around. They can typically lend up to 10 times with the amount of deposits they have on hand. So that's kind of their, it's the same with real estate. As you put like a down payment down on a house, the bank will typically give you, a 5 times your money, 4 to 5 times your money in a loan based on the amount of equity that you have. So same kind of thing with the bank, except in this case, they can have basically a loan of up to 10 times the amount of the deposits on hand as their kind of equity in the bank, right? So Silicon Valley Bank took a large amount of money, a loan, and then went and bought bonds yielding at 1%. Now what happened is they ran out of cash on hand. So for whatever reason, I think somebody got snooping around and realized that the bank was in a precarious spot because a large amount of their capital was tied up in bonds. And then for them to liquidate those bonds, see, if you're making 1% on a bond and you say have $100 billion in it, right? Well, to somebody that's going to buy those, nobody's going to buy them unless they can get a steep discount, because then they can get the same yield that they would out of, say, a 3 or 4% bond. So to sell those bonds and get the money back, they would have to sell them at a massive loss, which would put money in their coffers today, but would incur some serious losses, billions and billions of dollars in losses for the bank, which they couldn't handle. So what ended up happening, the bank became insolvent. They couldn't, they had no more cash. The government, the FDIC came in and took over the bank. So they took control and are running the bank. What they're doing they're not saying they're bailing the bank out, right? They're going to protect, they've decided to, they're not bailing it out, but they're going to protect all the depositors' money in the bank. And how they're doing that is they are buying the bonds, the super cheap 1% yield bonds that the bank had on its books for full price. So the government is essentially taking a loss, or not necessarily taking a loss, but they're not, they're just doing it for the pure purpose of putting money in the bank's pocket so then they can pay out the depositors' deposit. And so what is that affecting now as a real estate investor? So, I've talked to a lot of banks. We've been getting loans in the last couple of days for projects, and, there's not really any bank runs to speak of. Nobody that I know is really freaking out about, bank insolvency or anything like that. I mean, even before the government announced that they were going to protect the depositors, But what I have seen is actually the bond prices have. So what that means is that maybe a week ago, a 5-year Treasury was at like 4.5, 4.4, and now it's dropped to like 3.4. So that's a whole point in just a week is a huge dip as a fallout of this. And what that means is that because the government has essentially bailed out SVB by buying up their, bonds, basically overpaying for the bank's inventory of treasury notes and bonds, and so they can put cash in their coffers and then pay out the depositors, so they can then dissolve the bank. What's happened now is that is signaling to other investors that the federal government is probably not going to continue raising rates. So then other people are trying to buy up all treasury notes that are right now, and then that is lock in a 4.44% yield on their money guaranteed, and so that's driving the price of these notes down. So maybe they'll rebound, but essentially the market is pricing in, anticipating that the economy may be tapped out in terms of what it can handle from a rate hike perspective, because the government doesn't want to, controlling an economy is a complex thing, and the government's only tool is really to adjust interest rates, and then do things like this, which is directly interacting with companies, right? So what is happening now is they're anticipating, it could be wrong, could be right, that the government will stop raising rates, potentially even start lowering rates to ease the strain. Now, Mr. Jerome Powell has decided that the number one enemy is inflation, and it doesn't really matter what's going to happen. He's going to try to keep raising rates, but now that this has happened, this may alter the policy, because the last thing that the government wants is for a bunch of big banks to fail. And now I don't think that SVB, they might be an exception. Not all banks are invested at the same time with the same percentage of their money that SVB did. But with that, it brings the question of, what is the Fed going to do? So the market as a whole, at least right at this moment, as of, March 15th of 2023, they think that rates are going to go down. And so people are buying up lots of treasury notes, driving the prices down. But the rates could still go up. Mr. Jerome could still continue to raise rates or keep them the same and try to level things out. And but what that means as a real estate investor is that it's a good thing. If rates go down for us, that means that we can borrow money cheaper, and the homes are more affordable for our investments, and that's good. If they go up more, that's going to lower the price of real estate, which if you're a cash buyer or can wait a long time, that can be good for you as well. So that's kind of what the real effect that's going to happen. I don't know that we're going to see a lot of insolvency with banks. We talked to our local banks, and some people are telling you to stay away from local banks because they are not regulated as well. And we were talking, and again, the bank's talking to us, so it could be totally skewed, but they do have to publish their how their books are looking. All banks have to do this. And, he showed us, their report from last year of where their positions are at, how liquid they are, what they're invested in, all that sort of thing. And, what he said is that regulators actually for these small banks, because they have so much less going on, they're able to audit far more of the bank's files as opposed to a larger bank, where they may only be able to audit a couple percent of the bank's files just because there's so many of them. So, take that with a grain of salt. But I don't think that we're going to really see a bank run, especially now that the bank, the government is essentially bailing out depositors of all sizes, because that's going to help the whole perception as a whole of the banking sector, and prevent people from taking out their money and putting it with a large bank like Chase or something like that. So I think it's a good thing. The government's in a hard spot where it has to try to control inflation, but also keep it stable enough to where things like this aren't happening, where you have major crashes and fluctuations in the market. They're trying to keep things fairly level. So as an investor, I would continue to buy real estate at a discount and make good financial decisions, live below your means, because there's always deals out there no matter where the market is. I'm getting them every single day. There's always money to be made no matter where rates are. There's always going to be opportunity for you guys. And guys, for this giveaway, we're going to be giving away a 1-hour consulting call with me. Normally I charge about $200 for a consulting call like that, but we're going to be giving one away for free to one of the commenters in the first 24 hours. So guys, if you want to get in that, go ahead and drop a comment on this video. It can be anything, just your thoughts on this deal, you know, what you think is going to happen with the bank and how it's going to affect the markets. But for me, you know, I'm operating business as usual. I'm keeping a little bit more cash right now, trying to stay liquid, so that way if anything comes up, we have the money to pay for it. But other than that, you know, still wholesaling, buying deals at a discount, and buying great deals all the time, guys. If you like that, go ahead and hit the like and subscribe, and I will see you guys in the next video.